Good day, money masters and treasure hunters. Welcome to the May 15th terrific Thursday edition of the Closing Bell on the Tom O'Brien Show. I'm your guest host, Steve Rhodes, morning anchor here at TFNN.com and author of Mastering Probability, the daily newsletter service that is the intelligence for creating your financial freedom. I'll be filling in for Tom this afternoon, and I am grateful for your presence here today. My outcome, as always, especially this evening, is to teach you how to master the tools for trading, and that includes the tools of the mind, because when we master the tools of the mind, we begin to think like a strategist. So during the next hour, you'll hear me use terms like A to B equals CD, or swing points, or Gartley patterns, or various candlestick signals that the bulls and the bears, the sign makers of the markets, are making. We'll talk about things like evening stars, hammers, bullish and bearish candles. And each of these signals or patterns are what I call tactical tools or market tactics. But the real key to trading and investing, the real key to get your money to work harder for you than you do for it, is to have a strategy. What I call mastering probabilities. And that's where I come in, because strategists will slay the tactician all day long. Now, the foundation of any strategy is a strong mind. So let's look at one of our tools that help us think like a strategist, the tool I call perseverance. Makes a difference between success and defeat. True story. A despondent man who had lost his job and completed several dozen interviews without finding new employment was given the advice to continue looking forward to his next interview. In amazement, he questioned that advice, saying, "Why? Why try again?" The reply was simple. Because with each and every rejection, he was moving a step closer to the job that was waiting for him. Picture an outcome that's so strong that you want, that's resting at the summit of a steep and slippery mountain. Next, imagine a heavy stone placed upon your back just before you begin to climb. How do you feel the higher you climb? Excited? Tired? Frustrated? Look, if you fail to reach your outcome the first time, or even the second, the third, the fourth, what is it that's going to keep you going? Yes, folks, it's perseverance, because perseverance makes the difference between success and defeat. Perseverance is that voice within you saying, if at first you don't succeed, try again. Folks, never give up. Never, ever, ever give it up. It is Terrific Thursday. This is TFNN. I'm Steve Rhodes, and welcome to the show. Let's get things kicked off out here right now. We had the Dow closed down 167 points, finished out the session at 16,447. S&P down about 18 points, closing out at 1870 and change. NASDAQ composite off 31 points, trading out, closed out at 4,069. A bit of a comeback in the Russell 2000 during the session out here. In fact, it was the leader on the way down. It was down the least percentage-wise, off about 0.6%. Well, certainly we're going to start off taking a look at the IWM, the Russell 2000. Apple was off $5 today. Microsoft down 1.5% off 64 cents. Google off $6 out there. Leading the charge, the upside was VIP Shop Holdings, Intercept Pharmaceuticals, Clovis Oncology. Price-wise, that was up $14, $11, and $8 respectively. To the downside, Priceline down about $10. Alliant Tech Systems off 14, CF Industry Holdings down 9. So let's begin our day. Let's take a look at the IWM. Let's take a look at we want to look at the weak link. We want to understand what's going on in the market. And boy, there are messages. So fasten your seatbelts out here, because we've got a lot to cover for you. A lot of messages, a lot of clear messages that the markets are giving to us. So what did the IWM do today? Number one, if you take a look at the candle form, well, it was testing two swing points that it rejected, by the way. Volume in the IWM on the way down, 70 million shares today. Now, 70 million shares were going against 76 million shares from April 15th, going against the swing point from February 5th that had 60 million shares. So it moved in, and it's the second time that the IWM has moved into that February 5th swing point recently with volume. What does that say? It says that the work to the downside is not done. Maybe it's done just for the moment, but it is not done. It will be back down there to that February 5th low. Hasn't been able to punch through there. There are buyers that are waiting out there. In fact, we saw them when it came to the IWM, because what type of candle did it form today? Yes, it formed a hammer candle. Sort of. Why do I say sort of? Technically, it's a hammer candle. But what the IWM did today was it gapped down. If you take a look at yesterday's close, what's so important, with such a little nuance to really understand a candlestick and the message of the bulls. You see, the bulls and the bears have to report to work each day. When it comes to the New York Stock Exchange, they've got to report to work at 9:30. They're off at 4 p.m., but between 9:30 and 4 p.m., they're working hard, making signs for us, and it's up to us to be able to read those signs, to be able to help us understand what it is that they're trying to communicate to us. It's called sign language. We take a look at the markets out here. But here's the deal. Here's the subtle thing with regard to sign language when you take a look at the Russell 2000. That little gap down here, if you take a look at yesterday's close and you go ahead and fill that in, really technically this doesn't qualify as a hammer candle. Nonetheless, the bears were not able to truly punch down and close inside those swing points. They'll be back down there. Probably there is a bit of a bounce that is in play out here. So that's the IWM as it was trying to crack through the lows. The real key thing out here inside the two ETF structures, the SPYs and the diamonds, and when it comes to one of the indexes, the New York Stock Exchange, that was really the message of the markets. Now, if you know me, if you've listened to me, you know I'm pretty calm. I got a lot of energy. There's no question about that. But really calm when it comes to decision-making and patience and just simply sitting back, let the market communicate to us, and then go ahead and take some action. Well, the market communicated to us. It was as if it was a loud bullhorn out here. Now, to me, the most fundamental aspect of trading and investing is looking at technical patterns, because this is truly what the bulls and bears are communicating to us. If we start off with the SPYs, number one, the SPYs were pushing lower today with big volume of 147 million shares. So in essence, you've got volume off of the top today. But more important than that, you have the single largest, biggest, I don't know what the single, how about this, the single most bearish pattern that could be formed at all-time highs out here, and that's called the island reversal. An island reversal, what is that? Well, in this case here, it transpired over a period of 5 days. The 5 days beginning with May 9th. The top of the May 9th candle session, 188.04. The very next session, market gaps up. And a gap is just simply where you have a void of price, with the futures market just simply gapped up there. So you got that void of price there. The low of that session, May 12th, 188.75. What happened today? In fact, if you really weren't paying attention to the stock chart, you might not even notice it here. But if you take a look at the low of yesterday, the low of the May 12th area, what you'll see is the high of today, which is 188.72, that what we had out here was we had a 3-cent gap. Now, somebody might not think that 3 cents means a whole lot. That's like walking down the street, seeing 3 pennies, and just simply continuing to walk by. Folks, when it comes to 3 cents and this island reversal top in the SPY, do not walk by. If ever there was a bearish message, and does that mean that the market has to go down? No, it does not. But if ever you were looking for a message from the markets, this is it. Likewise, if those highs get taken out because of how bearish this pattern is, because you learn more from failure than you do from success. In fact, you can't have success without failure out here. If this pattern fails, meaning that the highs from the trading session here of March 13th, this market is going to roar higher. But we're on this 6-month unfavorable seasonal cycle out here. You just had one of the biggest bearish candles, most bearish candles out there, candlestick patterns. In fact, there's a couple of them out here. I'm going to pull up the one that really sticks out at me because it's during the unfavorable seasonal cycle as well. And that was the island reversal, the abandoned baby top in this case here, because this only took 3 days to form, and that's back on July 7th, 2011 out there. So the signal that came out of the SPYs today is absolute caution. If you are not using stops, please use stops, because you got a message, that same message here inside of the Dow Diamonds. The Diamonds today, volume off of the highs, 7.5 million shares to the downside, an island reversal pattern out here. There could be no clearer message in the markets than to take cover, than to take appropriate action out here. I am not an alarmist. Far be it from that. But there is no question that we got some big signals today. So, folks, again, I'm Steve Rhodes, the morning anchor here at TFNN.com, author of Mastering Probability, daily newsletter service that is the key to your financial freedom. My service, Mastering Probability, is outperforming the S&P by 114% during the last 10 months. All I'm asking you to do is invest $5 a day in yourself and receive in return what's been averaging about $95 a day on a $100,000 account balance. Again, click on my name, Steve Rhodes, on the homepage at TFNN.com. Check out Mastering Probability. We'll be right back, folks.